Good evening, Trade Flare family. Welcome back to the nightly breakdown, where we break down what happened today in the stock market, as well as give you an idea of what we're looking at into tomorrow. Now, before we head over to conduct a technical analysis of the SPY and 5 stocks, let's look at some key points to get a broader view of where we stand. So the first thing I want to talk about going into Friday is that we have a 3-day weekend ahead. The market will be closed on Monday for Independence Day, so I hope you all have a fun, safe, and relaxing 4th of July. The one thing I want to take note of is that the markets tend to see increased trading activity and higher returns the day before a holiday or a long weekend. This is called the holiday effect. With the market being on all-time highs and everything starting to pick up, we could see a broader market move tomorrow. And I think it's all going to depend on our second key point, which is the jobs data we'll get tomorrow morning. We got the initial jobless claims today, and that was less than expected. The median forecast was 390,000 and they came in at about 364,000, and last month it was 415,000. Tomorrow we're going to be looking for the unemployment rate data as well as the average hourly earnings data. I think if the data is pretty close, we'll have a really good day tomorrow and possibly a down day on Tuesday. This will be due to the weekend effect, the holiday effect, accompanied by some good jobless claims data that can continue to support the Fed stance. I do think we'll see a lot of volume either way tomorrow, so it's going to be a great day for day trading. So let's head over to our last key point, which is, as always, our indices in our sectors. And the leading indice today was the S&P. Right behind was the Dow, and the lagger was the Nasdaq. So we saw tech take a break. Value started to lead growth here. As far as the leading sectors, we had energy, utilities, healthcare, and financials. On the downside, we had consumer staples and tech, and those emerging markets were down today as well. Definitely keep in mind the rotation that we're seeing here. Keep an eye out for this rotation that we're seeing here. The sector I'm really watching closely is the healthcare sector, and year on year they haven't had as big of a move as the other bigger weight sectors. And as you can see here, the health sector ETF is breaking out of a bull flag, so something to keep in mind as we go into the next week. So now that we have a broader idea of where we stand, let's head over to do a technical analysis of the SPY ETF, which tracks the S&P 500 index. So looking at the daily here, we closed above this $430 level, and I do want to point out that now we're kind of in range of this resistance trend line that we have drawn out from over here. So it is realistic to say we could go higher all the way up to $436 and then see a down day on Monday. If we got good jobs data tomorrow, that wouldn't surprise me. I do expect volume tomorrow, so watch out for that. We have had good volume going into the end of this week. I wouldn't be surprised to have the biggest day we've had all week tomorrow. So now that we have an idea where the S&P sits, let's dive into the rest of the watch list, starting off with Oracle. And looking at the daily here, we started to grind back into this gap here, so I'm looking at this for a potential gap fill play. Today was a really nice day with nice volume breaking through the 50-day moving average. If we break through the 200-day moving average, I say definitely we fill up to 81.36, and I think we could do it rather quickly, just like we did down here. So watch out for the gap fill play here with Oracle, possibly a great Friday day trading opportunity. Next up on the watch list is Gilead Sciences, ticker symbol GILD, and this one's got some pressure cooking underneath this resistance trend line. It's right around this key resistance price level at $70. And like I said, I like the healthcare sector right now. This is a big cap that looks like it's ready to run. It's also a value play. They offer a 4% dividend. We got the shares today, but we're also looking at leaps and shorter term calls. Like I said, above that $70 level, this thing could start to run. I'm long on Gilead. A lot of analysts are long on Gilead. It's a pretty fundamentally sound company. It's also one of those companies that has a PEG ratio under 1, but their PE ratio is really high, so their expected growth rate is really high, and at this price I don't think that it's reflecting that. So I am long on Gilead Sciences. Keep your eye out for ticker symbol GILD. Next up on the watch list is Marriott, and this thing's drawing out a long flag. And I'm really intrigued by the volume that we had today, and I think this one could be at least ready to go up and test this 50-day moving average, if not this support trend line again, for the possibility of a flag break. Now I really like this volume, but I also want to bring up the money flow indicator and the fact that it's creeping up and it's about to break through 0. So overall, this was a good day for Marriott, definitely waking things up from being at the bottom. This is a long drawn out consolidation, so watch out for Marriott to break out of this range. Next up on the watch list, I have AT&T. This is breaking out of a falling wedge after a downtrend. The only thing that isn't giving me conviction about this is that there was low volume today, so I want volume to pick up here. If we do pick up, my first target is 30. It's pretty much the bottom of the gap, and if we can break into the gap, a gap fill play would be in play. In that case, we'd be looking at our 50-day moving average, and then a fill all the way up to 31.24, which is the top of the gap there. I like AT&T. I like where this is at, so definitely keep your eye out for ticker symbol T. Next up is Temper Sealy TPX. This is a long body breakout candle breaking through a range resistance, and this range looks like it's been a long drawn out bull flag. So if I double this range, my target is at 44.85, so right around the $45 mark. Doing some reading up on this one, there's a lot of hedge funds holding this one. This is a fundamentally solid company, but the hedge funds are going deep on this one, so watch out for this one. Temper Sealy TPX, the makers of the Tempur-Pedic bed, so definitely keep this one on your watch list. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, or if you learned something, make sure you hit the like button and don't forget to subscribe so you can get notified whenever we post any live or educational content. If you're looking to join our team and be surrounded and motivated by our online community of traders and investors, as well as gain access to trade signals that let you know whenever we make a trade, check out the link in the description below to join our Discord. Gain full access by upgrading to TradeFlare Pro. Get half off your first month using the discount code TFPRO2021. But don't be mistaken, we are not financial advisors and none of this is a recommendation. The stock market is risky and you could lose money, so use the information inside these videos at your sole discretion. And as always, you cannot forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.